Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
There's a phrase that's especially prominent among professional traders. It's called overtrading. There are some times when the market's really boring. Now, that's certainly not the case now. There's plenty of things going on in the currency market. But when you have some of these days, and you will again, possibly soon, when there's not a lot going on and you just can't find a trade to make, put your hands in your pockets. Go out and take a walk. Go golfing. If there's not an opportunity presented to you, you don't have to make a trade. Sometimes not making a trade can be the best trade you make. And another problem, too, is undertrading. And I see this a lot with people who are brand new, especially to options, because they're a little bit more complicated than other types of trading, especially Forex options. Lots of moving parts. You got to pay attention. You can be a little bit overwhelmed with all this stuff. And you think, oh, boy, I don't know. And, next thing you know, you get nervous and you don't pull the trigger on a trade. Next thing you know, a week passes and you don't make a trade. Or, you're just waiting for that perfect opportunity and you don't trade enough. And if you've got capital sitting in an account and you're treating this like a business, you're treating your trading account like a business, you've got to make enough trades to warrant a potential profit at the end of the year, and a reasonable profit. You've got, a $500,000 account, and you trade, 1 5 lot every week. You're probably not going to meet your goals. So finding the right balance for you, for your abilities, for your experience level. If you don't understand options yet, you sure shouldn't be out there trading a whole bunch of them. You have to wait until you really, have a grasp on the product and get some education behind you. When my students first sign up for my mentoring, first thing I tell them to do is, hey, look, if you don't have any trades on now, don't put any on. If you got some on, slowly close them down when you have an opportunity to get out. Don't put any new ones on. We're going to paper trade. We're going to paper trade, and I'm going to show you how to go through this process and really how to learn how to trade from scratch. Forget everything you know. We're going to go through this process, and you're going to have the process down by the time we're done. Then maybe about halfway through, you can start trading real money again. All right, so let's talk a little bit about probably the single most important thing in trading of any sort. And this is kind of the whole reason why we have the trading path to follow. It's the concept of edge. A lot of people who are new to trading think that the name of the game to trading is getting good at picking winners. That's an amateurish way of thinking about trading. It's not the case at all, really. I'd love it if every time I guessed what was going to happen, that it actually happens. I'd love it. But look, nobody knows. Surprises happen. Some of the best traders that I know actually have more losers than winners. It's about money managing. It's about playing the odds, and specifically, it's about getting edge. Now, let's talk for a minute about edge. Imagine for a moment that I picked one of you out of the audience. We were in a classroom here, face to face. I picked one of you out of the audience, and imagine that that person is you. And I said, Charlie, we're going to play a game. except if you're imagining it's you. Imagine I called you by your actual name, not Charlie. We're going to play a game here, and here's how the game works. I'm going to flip a coin, and every time I flip this coin, if heads comes up, I'm going to pay you $1. And every time tails comes up, no money changes hands. Okay, Charlie, or whatever your name is, do you want to play this game? Now, if you're imagining that I'm actually talking to you and you answered no to that question, you should stop trading and find a different hobby. It's basically free money statistically. You either make $1 or you make nothing. Why wouldn't you play that game? You have nothing to lose. Now, me being a rather savvy person in the world of statistics and trading, I say there's a catch. You're going to have to pay me to play this game. How much are you willing to pay? And think about it for a minute. Think about it. Heads comes up, you get $1. Tails comes up, you get 0. How much would you be willing to pay to play this game? Well, the fact of the matter is that there is an answer to this question. And that answer lies in the expected return. Because you have a 50% chance of heads coming up and making $1, and a 50% chance of tails coming up and making 0, each coin toss means you make 50 cents. So if each coin toss means that you make 50 cents, then you would be willing to pay anything up to about 50 cents. Anything less than 50 cents. You'd pay about, because we can't split pennies in a classroom scenario like this, you'd pay up to 49 cents. And you don't want to play this game once, because then really you're either going to lose 49 cents or make 51 cents. You want to play this game with me 1,000,000 times. Because the more times we do this, the more times we play this game of winning $1 or winning nothing, the more often, or the greater chance we're going to get to that 50-cent average payout. Okay. Steve, presuming that's you, I realize that. And so this is how option trading works. You're not going to be right all the time. And you go back through your trades and you look at them and really sit down with a pen and paper and calculator or a spreadsheet or something and figure out what your winning and losing percentage is. For some of you who are really good with technical analysis and fundamental analysis and you really know the currency market, you might be up at 70-75% winners. We still have 25% losers. Do you want to say, and do you want to set yourself up in a situation where when you win a little, and when you lose big? Because that might not pay out for you as far as the expected return goes.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.